Broadcast. Bang. Want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. November the 15th, 2011, 4 p.m. Eastern. What a day. What a day. Continuation, baby. That's the name of the game. That's what they're calling it. Dollar rallying. Yet S&Ps were up. They were down, but the stock market rallied. But the dollar did not sell off. What the hell is going on, people? I'll tell you, we have not had a day like today in a long time. Euro dollar closing relatively close to the lows, broke through 135. Yet the S&P closing with the Dow only up 17. But remember, the S&P futures were trading at like, what, 1245? They rallied 20 handles. And this Aussie dollar didn't budge. What's up with that? Something's up. I smell a rat. Something's up. I think we get more continuation. I think someone in the know knows something. I mean, you know, it was prevalent throughout the day that the stock market was grinding higher and nothing was really happening. But even that last bolt we had at like 245, still couldn't get even the Aussie over 102. So that just has to lead one to believe we're going lower. Sayonara. And I think that as far as the numbers are concerned, you can make a case that, hey, the U.S.'s numbers are pretty good. I was wrong on some of the European numbers last night. GDP out of France, a little better. Revision was worse. Up 0.4, though. German GDP in line, up 0.5, but revision was higher. Another good thing. I'm telling you. Crazy. London inflation data a little bit light, up 5% year on year. House price index down 1.4 year on year, right in line. Core CPI 3.4, a little hotter. French payrolls not very good, quarterly number. And of course, the minutes I was wrong on Australia too. Yet that sucker just can't even work, huh? It's crazy. Australia, they said they really didn't even have to lower rates per se. Shocker. Aussie actually tried to rally a little bit on that. And hopefully he got short. The Kiwis were notoriously short today. Aussie Kiwi broke out. Lots of charts to look at, people. Remember, I have a premium service. Try my product. $200 a month. And I'm going to help you make money. And at least teach you my methodology. You might disagree with it, but certainly is another methodology. You might want to try it out. 1 week free trial. Email info@globalfxllc. U.S. numbers today, very shockingly good. By the way, that German zoo, negative 59.1. Terrible. I'm sorry, that was Eurozone. German zoo, negative 55.2. Much weakened estimates of 51.8. So that wasn't even good. Canadian manufacturing sales surging 2.6%. Vehicle sales only up 1.5%. That was not good. U.S. producer prices on the core side only up 0. Supposed to be up 0.1. Retail sales out of the U.S. surprisingly up 0.6. Revision was weaker, but still a good number. Headline retail sales up 0.5%. Empire Manufacturing up 0.6. It was supposed to be negative 2. So all in all, really, U.S. side, you did have some good numbers. You got to give the U.S. economy credit. So maybe that's one of the reasons why you had this divergence. I mean, crude pretty much hung in there. I mean, gold hung in there today. So, again, we look at this daily chart. And I got to tell you, this dollar index looks like it wants to push higher. But, you know, the hardest thing really trading is trading without wind at your back. And with the S&Ps looking like they want to be up, it's so hard to trade not knowing. S&Ps rally, and you're caught long the dollar. Doesn't make sense. And one of the things I've always said in foreign exchange, you've got to go with what doesn't make sense. So that means long dollar, baby. Maybe and if the stock market does come in, oh my goodness, say goodnight. So again, I think the 78.50 is attainable. And we'll take a look at the S&P futures. They closed strong. Once again inside the wedge. But we came back. Now, just because we came back does not mean we're going to explode tomorrow. I got big time resistance at that 1270 level. We can head right back down. This market is so bipolar, I would put nothing past it. Nada. But again, above 1280, we're going higher. I mean, we take out 1280. And, you know, the problem is there's so many people that think we're going to have this year-end rally, and there's so many people that think we're not. Which means there's a tug of war, and someone does win in the end. And that will be the momentum. Because let me tell you something. A lot of people position themselves for a year-end rally. If they capitulate, oh no. Say bye-bye. We do have numbers coming out tonight. Wage prices out of Australia. Leading index. Japanese rate decision. We'll see if they talk about their intervention. I doubt it. London, their version of non-farm payroll claim and count is supposed to be at 20,400. Average earnings, that's an important number to look at. They were supposed to come in at 2.5. That's a big drop from last month's surprise of 2.8. So average earnings, usually the pound on a better number, is strong. Eurozone CPI, year on year. Core side 1.6%, headline 3%. We have King speaking tonight out of the MPC, as well as the inflation report, quarterly. That should be pretty significant. Remember, if they see inflation as benign, they can increase their asset purchase facility, or at least ramp up the buying of the bonds. And certainly we might talk about the European situation as deflationary. So I think it's going to be a pretty dovish inflation report. U.S. core CPI is supposed to be up 0.1. Dovish. Foreign flows of capital is supposed to increase to $63 billion. Industrial production capacity utilization also coming out. Housing market index too. Industrial production is supposed to be up 0.4. I have no idea. I mean, most of the manufacturing numbers have been getting better. So I wouldn't be surprised. Not one bit. As far as tonight's trade, again, I think once again, all eyes turn to Europe. Italian bond yields above 7%, and the stock market was up. Surprising. Important. Take note. Or it was more just bullcrap. You know, just meant nothing, maybe. Maybe stock market's just going to be down tomorrow. Dollar's up. Or maybe something's going on. But I think what's key is over the next day, two, we're going to find out if this correlation is in fact dead, stock market to the dollar, or today's was just an aberration. So, and one of our markets is telling the other market. Big. Got crude inventories also supposed to be down 1.3 million barrels. Crude looks like it wants to punch through 100. So again, look at this S&P. It continues to wedge. It came back. Didn't hit my channel line on the downside. I was looking at 1225. So we still could hit that. Again, we're really nowhere. The Dow really went nowhere. S&P definitely came back 20 handles, but that was about it. Looking at the euro dollar. Again, big divergence. Could not rally. Couldn't do it. Should we take out 134.90? Say goodnight. I think we go right down to 134. I think the more everyone keeps talking about this, it's a big problem. The banks are going to take a massive hit. They're going to be insolvent. The government's got to come in and inject money and print money. It has to happen. And they're trying to say, the Germans, we're not doing it. Well, then the Eurozone's gone. And I'll tell you, Larry Fink, BlackRock, I believe, came on to CNBC today, and he said it best. Because it's what people don't know, don't understand, the domino effect. But maybe it should happen. What if you own Italian bonds, but they're priced in euros? And the lira comes back, and it collapses, but the euro holds. Now, Italian payments on those debt payments just went up by 40%. The payments themselves, because you're paying in lira, and lira's worth nothing. They cannot go out. There's too much interconnectivity. There will be too much disaster. And it's almost like the Germans are jawboning the euro down, almost. They want it to go down. They would love it to go down. But this chart certainly doesn't look good. People are still going to want to buy Mercedes if they have to pay Deutschmarks. It's not going to change Mercedes sales by much. Look what they export to. They can just keep the euro and just kick the other ones out. 132 channel line on the euro. Looks terrible. Mas horrible. Again, the key is going to be any news, and I don't see any new good news on the horizon. It all looks bad. Euro Swiss. Glad we stayed away from that, but continues to try and push higher. Try to get that 124 again. Failed. But it looks too good. Looks like it wants to go up. Euro yen came in nicely. Hopefully you had it short. Nice spike in Asia on that dollar yen, huh? Oh my goodness, what a squeeze. They got everyone out. I love it. Going lower. Sell any strength. Breaking the whole neckline here. New closing low. It looks terrible. I'll tell you, all these charts, you would think stock market down. Someone's telling us something. Euro sterling couldn't break. Made a comeback. Came off nicely a little bit, but came back. I still think it rolls over. I still think it acts terrible. Cable, really, relative strength loser today. Certainly in the U.S. session. My Euro Canada continues to roll over. Tough trading thing, man. This thing pops, sells off. Just drips and drips and drabs. Loco. But this Euro Canada is going to roll over. Absolutely. Good numbers out of Canada, good numbers out of the U.S. I got to tell you, this Canadian dollar could be set up for a big rally. U.S. numbers continue to be good. Manufacturing sales out of Canada were good. Oh, baby. Macro lining up with the technical. You got to love it. Dollar yen had that little spike in Asia. Came right back down. Bang. That's your spot, 77.60. Takes that out. I think got to get long. Other than that, it's a short. But rather wait for after the BOJ. Not sure. What the hell was that? This dollar Canada, once again, failed. There was definitely a nice 100 pips in it. Hopefully you booked it. But this dollar Canada still looks good to me. Looks like it wants to push higher. It's a BOP, buy on pullback. Stop us about today's lows. Oh, baby. Dollar Swiss. Move it. Oh, baby. Trying to break out. Didn't play it. I'm nervous about this thing. Look at that. Sick rally. Intervention. Or really, manipulation. Rigged game. I wonder who he told. You don't think Jordan told one of his buddies, hey, we're going to keep on intervening. Keep buying. Of course he did. Dollar count looks like 102.60 easy. Maybe 103. Cable is busted. Broken. Rolling over. Say goodnight. Say continuation. I don't know how much. Again, this inflation letter is going to be significant. I think we come down easy to 57.25, have continuation. Yep, 103.20. Looks like that way to me, too. But in looking at this cable, looks like it's going lower. And as far as my other gorgeous trades in pound Aussie and pound Kiwi, oh boy, how about that pound Kiwi? Oh my goodness. What a wild day in the pound Kiwi. Big time reversals. We're going to take a look at that. I mean, given the weakness in the Australian dollar, you would think that this is a reprieve. Should hold. Outside candle, though, looks terrible. Pound Aussie looks terrible. But how much is it going to go down? Only way, baby. If the Aussie's cranking. But again, today you had the pound dollar down nicely. Aussie down. Aussie bounces. Cable does not. That's a recipe for disaster. I lost money in it. Now, pound Kiwi is another story. Now that, break it out to break it down. I was hoping for a little bit more. I was hoping it was going to come in a little bit more. Wild day in this thing. But I got a nice little channel line here. Just about tagged it. Just about, I said. But again, we could be breaking out nicely here. And if the stock market is going to reverse, because something's up. Can't have it both ways. I do not believe this is going to continue where the stock market goes up and the dollar goes up. No way. So, you look at this Aussie, certainly could be a nice little hammer. We take out 102, it's going higher. Probably go right up to 103. I think it's also, a very tough night. Because on one hand, I've seen plenty of times when we lag, and then everything just goes up. Just goes up. And you're like, why the hell is that happening? How is it that easy? And sometimes it just is. So again, I think the futures are key tonight. I think the euro, again, is the sell. Like you look at this euro Aussie. Looks terrible. But this Aussie, it can get up to around 103. I'd love it. Get the S&Ps at that 1270 level. Nice sell-off. Bye-bye. Aussie Kiwi. Look at that breakout. Gone like the wind. I shorted it. Lost a little money in it today, but really wasn't the end of the world. But again, I got this big channel line here. Might get up there. Because now fib gets taken out. That's the next spot. I didn't quite get to my fib level, but damn close, baby. So we get another push higher to this fib. I'm even looking to put it out. I understand it's more broken out, but and I understand the RBA last night basically saying they didn't have to cut rates. I understand, but they did. And the Royal Bank of New Zealand, they said they're going to have to raise rates. So I think this one maybe has another pop, and that's it. Wild Wednesday. New Zealand relative straight loser today, big time. Rolling over, heading for a channel line. Oh, yeah. Looks like 76. This New Zealand dollar acts like dog meat. Terrible. Can't rally. And that took out previous day lows. And look where it's closing. Terrible. The Aussie. Look at that. Still got to take it out. So something's got to give. And again, I think these S&Ps are going to be on the weak side. Maybe they rally and reverse, but we do eventually have to hit 1270. So I would just rather maybe we're weak, and then maybe we rally. So maybe tonight it's dollar up, futures down, and then maybe some good news and we explode. I don't know. But something doesn't make sense. So be very careful, people, in these markets. Andrew Spanton, team will see you back at 5 o'clock. 5 o'clock. Andrew Spanton, Global Markets Radio, the only voice you'll ever need, who truly loves to make you money. Like last night. Ching, ching. Have a good one.